Imagine waking up one day only to realize that your wealth isn't working as hard as you are. The world of high net worth investing can be complex, but it doesn't have to be a maze of confusion. In the next 10 minutes, we're going to unravel the top strategies that can elevate your financial game and secure your legacy. Whether you're looking to preserve your fortune or make it grow, these insights are tailored just for you. Stay tuned, because this might just be the game changer you've been waiting for. Alright, let's talk diversification. You know that old saying, don't put all your eggs in one basket? Well, it's not just some cliche, especially when you're dealing with serious wealth. Imagine this. You've got all your money tied up in one stock, one real estate project, one big idea. What happens if that one thing goes south? Disaster, right? That's why diversification is key. Think of your portfolio like a well-balanced breakfast. You've got your stocks, which are like your high-energy fuel, potentially bringing in big growth, but just like too much coffee, they can be volatile. Then you've got your bonds, the steady and reliable oatmeal of the investment world, providing stability and income. And of course, you can't forget real estate, the pancakes of your portfolio, offering tangible assets and long-term appreciation. See, by spreading your investments across different asset classes, you're essentially creating a safety net for your wealth. If one area takes a hit, the others can cushion the blow. It's like having multiple streams of income, but for your investments. Now, diversification isn't just about spreading your money around randomly. It's about strategically allocating your assets based on your risk tolerance, your financial goals, and your time horizon. It's about finding the right balance between risk and reward, so you can sleep soundly at night knowing your wealth is working as hard as you are. Let's say you're heavily invested in tech stocks, and the tech sector takes a dip. It happens, right? But if you've diversified into real estate, bonds, or even precious metals, those investments might hold their value or even increase in value, offsetting your losses in tech. Diversification is all about managing risk. It's about protecting your hard-earned money from the unexpected. And trust me, in the world of investing, the unexpected happens more often than you think. So whether you're just starting out or you're already a seasoned investor, make diversification a cornerstone of your investment strategy. It's one of the simplest yet most effective ways to protect and grow your wealth over the long term. Now let's dive into the exciting world of private equity. This is where the big players, the high net worth individuals, often find some of the most lucrative opportunities. Think of it as the VIP section of the investment world. See, unlike the stock market where anyone can buy a piece of Apple or Tesla, private equity deals with investments in companies that aren't publicly traded. These are often startups, emerging companies, or even established businesses looking for capital to expand or restructure. Now you might be thinking, why would I want to invest in something that's not on the stock market? Well, that's where the potential for higher returns comes in. Because private equity deals are, well, private, they often come with less regulation and more opportunity for growth. Think of it like this. When you invest in a company through the stock market, you're buying a tiny piece of a massive pie. But with private equity, you have the potential to own a much larger slice. And as the company grows, so does your investment. But, and this is a big but, private equity is not for the faint of heart. It comes with higher risks. These companies are often in their early stages and there's no guarantee they'll succeed. That's why due diligence is absolutely crucial. You need to do your homework, research the company, the management team, their track record, everything. And this is where partnering with experienced private equity firms can make all the difference. They have the expertise, the network, and the resources to identify promising opportunities and mitigate risks. Imagine trying to navigate the world of private equity on your own. It would be like trying to climb Mount Everest without a guide, without the right equipment, without any experience. Not a good idea, right? That's why having the right partners is essential. Private equity can be a game changer for high net worth individuals looking for those outsized returns. But it's not a get-rich-quick scheme. It requires patience, due diligence, and the right team by your side. Chapter 3. Tax Optimization. Hold on to your hard-earned wealth. Let's face it, nobody likes paying more taxes than they have to. And for high net worth individuals, tax optimization is not just an option, it's a necessity. It's about keeping more of what you earn and making your money work harder for you. The good news is that there are strategies available to high net worth individuals that most people don't even know about. These aren't your run-of-the-mill tax deductions. We're talking about sophisticated strategies tailored to your specific financial situation. One powerful tool in your tax optimization arsenal is the world of trusts. Think of a trust as a legal entity that holds and manages assets for the benefit of your chosen beneficiaries. There are various types of trusts, each with its own unique advantages, but they all share a common goal: to protect your assets and minimize your tax liability. For instance, a charitable remainder trust allows you to donate assets to a charity while still receiving income from those assets during your lifetime. It's a win-win situation. You get a tax deduction for your charitable contribution, you continue to receive income, and your chosen charity ultimately benefits from your generosity. Then there are strategies like family limited partnerships or LLCs, which can be incredibly effective for managing family-owned businesses or real estate holdings. These structures can help reduce estate taxes, protect assets from liability, and even provide for future generations. But here's the thing, tax laws are complex and constantly evolving. Trying to navigate this landscape on your own can be overwhelming and even risky. That's why it's crucial to work with experienced tax professionals who specialize in high net worth individuals. They can help you develop a comprehensive tax plan that minimizes your tax burden while ensuring you comply with all applicable laws and regulations. Remember, tax optimization is not about evading taxes. It's about legally and ethically reducing your tax liability. Chapter 4. Real Estate Building Wealth Brick by Brick. Let's talk about real estate, a classic wealth-building tool that stood the test of time. It's tangible, it's understandable, and it's something you can see and touch, which can be reassuring in the often abstract world of finance. Now, when it comes to real estate, there's a whole spectrum of options available, from residential rentals to commercial properties to vast land developments. The key is to find the right niche that aligns with your risk tolerance, your investment goals, and your overall strategy. One popular approach is investing in rental properties. This could be anything from a single-family home to a multi-unit apartment building. The beauty of rental properties is the potential for both passive income and long-term appreciation. You're essentially building a business that generates cash flow while your asset hopefully increases in value over time. Then there's commercial real estate, which includes office buildings, retail spaces, industrial warehouses, and more. Commercial properties often come with higher potential returns compared to residential, but they also tend to require more capital upfront and can be more complex to manage. And let's not forget about the world of REITs, or real estate investment trusts. REITs are like mutual funds for real estate, allowing you to invest in a diversified portfolio of properties without having to deal with the headaches of being a landlord. They're a great way to gain exposure to the real estate market without the hassle of direct ownership. But just like any investment, real estate comes with its own set of risks. Market fluctuations, interest rate changes, property taxes, maintenance costs, these are all factors that can impact your returns. That's why thorough due diligence, market research, and careful planning are paramount. Before you dive headfirst into that dream investment property, consider factors like location, market trends, potential rental income, and expenses. It's also crucial to factor in the time commitment involved in managing properties or working with property managers. Chapter 5. Impact Investing, Making Money and Making a Difference. Now, let's talk about a way to align your investments with your values. Impact Investing. This is about putting your money to work not just for financial returns, but also for social and environmental good. It's about investing in companies and projects that are making a positive impact on the world. Imagine a world where your investments not only grow your wealth, but also contribute to solving some of the world's most pressing challenges. That's the power of impact investing. It's about using your financial resources to support businesses that are tackling issues like climate change, poverty, inequality, and more. Now, you might be thinking, can I really make a difference and still earn a competitive return? The answer is a resounding yes. Impact investing has evolved significantly in recent years, and there are now countless opportunities to invest in companies that are both profitable and socially responsible. From renewable energy to sustainable agriculture to affordable healthcare, impact investing spans a wide range of sectors. You can find opportunities to invest in publicly traded companies that are leading the way in sustainability, or you can explore private equity or venture capital funds that focus specifically on impact-driven startups. One of the beautiful things about impact investing is that it allows you to align your portfolio with your values. Whether you're passionate about clean energy, education, or social justice, there are investment opportunities out there that resonate with your beliefs. And the best part? Impact investing is not just for the ultra-wealthy. There are options available for investors of all levels, from small-dollar crowdfunding platforms to ESG-focused ETFs to direct investments in social enterprises. So, if you're looking for a way to make your money work harder for you and for the world, explore the world of impact investing. It's a chance to generate financial returns while making a tangible difference in the lives of others and the health of our planet. If you found this video insightful, don't keep it to yourself. Hit that like button, share it with your network, and drop a comment below with your thoughts. And if you haven't already, make sure to subscribe to our channel for more in-depth content on managing and growing your wealth. Remember, the best investment you can make is in yourself, and we're here to help you every step of the way. Thanks for watching, and we'll see you in the next video.